Gold and silver markets are dynamic and often dramatic. But at the heart of silver's price action today is one key relationship: the inverse correlation between the US dollar and silver prices. In this video, we'll explore how this relationship works, why silver has been sliding recently, and what this could mean for the market next. Right now, silver is trading lower, falling around 5% on February 17th, 2026, with spot prices under $75 per ounce in US markets. This drop is linked to one of the most powerful forces in commodities, a firm US dollar, which tends to pressure precious metals, especially silver. To understand why this happens, we need to break down a few core concepts, starting with basic currency and commodity relationships. Why the US dollar matters for silver prices. When people talk about the price of silver, they are implicitly talking about the XAG/USD exchange rate. That is, how many US dollars it takes to buy 1 ounce of silver. This makes silver very sensitive to changes in the dollar itself. Here's the key idea. When the US dollar strengthens, silver prices often weaken. When the US dollar weakens, silver prices often rise. This happens for a few connected reasons. Silver is priced in US dollars globally, so when the dollar is strong, it takes fewer dollars to buy the same amount of silver. Or stated differently, silver becomes more expensive for buyers holding other currencies. Trade slows and prices drop. A strong US dollar often reflects higher real yields and stronger US economic data. That encourages money to flow into US treasuries and dollar assets rather than into non-yielding commodities like silver. Investors use silver as both an industrial metal and a hedge. When confidence rises, often correlated with a strong dollar, markets may favor stocks or bonds over precious metals. These relationships aren't theoretical. They can be seen in real market behavior. What's happening in the market right now? On Tuesday, February 17th, 2026, silver futures dropped sharply, falling roughly 5% along with gold, as a firmer US dollar made precious metals less attractive. Why exactly did this happen? Global markets, including China, were closed for the Lunar New Year, reducing trading volume and demand, especially from key Asian buyers. Diplomatic talks between the US and Iran signaled easing geopolitical risk, which normally drives safe haven demand for metals like gold and silver. Meanwhile, the US dollar index ticked higher, making dollar-priced silver more expensive for holders of other currencies. This combination, lower global demand, lower risk sentiment, and a stronger dollar, is a classic setup for pressure on silver prices. Technical traders have also pointed out that silver recently slipped below its 50-day moving average, a widely watched trend line, further reinforcing short-term bearish sentiment. The mechanics of the dollar-silver relationship. Let's go deeper into the mechanics. Why exactly does a rising dollar create a bear market in silver? 1. Currency effect. Silver is priced in dollars. If the dollar strengthens against other major currencies, then silver costs more in those other currencies, which reduces global buying power for silver. This, in turn, squeezes demand. It's similar to the concept that a strong dollar makes US exports more expensive overseas. 2. Interest rates and real yields. A strong dollar frequently means higher yields on US government bonds. When real yields, adjusted for inflation, rise, investors tend to prefer yield-bearing assets over non-yielding commodities. Silver doesn't pay interest or dividends, so it becomes less attractive compared with treasury bonds or even equities. Higher nominal yields also often reflect expectations of tighter monetary policy, which historically has weighed on commodity prices. 3. Safe haven demand. Switches to the dollar. In times of stress, the dollar itself becomes the safe haven. Today, easing geopolitical tensions, such as progress in the US-Iran talks, reduce the need for precious metals as hedges, shifting flows back into the US dollar. Why silver is more volatile than gold. Silver tends to move faster and farther than gold when conditions change, and the dollar relationship amplifies this. Silver's dual role as both a precious metal hedge and a key industrial commodity makes its price more sensitive to economic swings. Industrial demand accounts for a large share of total silver consumption, from solar panels and electric vehicles to electronics and telecommunications infrastructure. NASDAQ. This means silver doesn't always behave like gold. For example, gold is often bought primarily as a safe haven or hedge. Silver is also influenced by industrial demand cycles. In other words, silver's price moves are often twice sensitive to both currency dynamics and real economic demand. Evidence from the 2026 market. To illustrate this relationship with real numbers, in early February 2026, silver prices briefly surged above $120 per ounce during intense speculative buying and safe haven flows. But then the metal dropped as much as 37% from its recent high, driven in part by stronger dollar conditions and forced liquidations among leveraged traders. More recently, prices have been trending lower, trading in a range near $75 to $80 per ounce, with sellers dominating as buyers wait on key signals like U.S. inflation data and Fed policy expectations. This highlights a key point. Silver's recent swings are not random. They are linked directly to dollar strength and monetary policy expectations. What could happen next? So where might silver prices go from here? The answer depends largely on two forces. One, U.S. dollar direction and monetary policy. If the U.S. dollar remains strong, possibly due to higher yields or resilient U.S. economic data, silver could continue to struggle. In that scenario, key technical levels might fall, such as support zones near $70 to $75 per ounce. If silver breaks below, deeper declines could test $64 or lower alternatively. 2. U.S. dollar weakness and safe haven flows. Silver could rebound significantly if the U.S. dollar weakens due to slower growth, inflation surprises, or expectations of future Fed rate cuts. Geopolitical tensions flare again, increasing safe haven demand for precious metals. Real yields fall, making non-yielding metals more attractive relative to bonds. In these conditions, silver might quickly recover and rally toward previous highs, even into triple-digit territory, as some analysts have forecast for 2026. Finance magnates. Additionally, continued structural demand from industrial sectors, especially renewables and high-tech, could provide a stronger price floor over time. Even while silver declines in response to dollar strength in the short run, long-term demand from industrial sectors, like solar and electric vehicles, remains robust. Silver's role in clean tech and AI-related technologies continues to be a strong structural tailwind. Industrial silver demand has expanded significantly, now accounting for more than half of total usage, far higher than in past decades. Yet supply has struggled to keep pace, contributing to continued structural deficits in the market. This means that over multi-year time horizons, silver's fundamentals could support higher price levels if macro conditions eventually turn favorable. Let's summarize the most important takeaways. Silver and the U.S. dollar are inversely linked. A stronger dollar typically pushes silver prices lower because silver becomes more expensive in other currencies and loses safe haven attractiveness. Current market pressures are real and measurable. Recent declines are tied to dollar strength, thin trading volumes, and easing geopolitical risk. Barron's +1 silver's volatility means wide price swings are normal. Expect sharp moves on both up and down signals based on macro data. Long-term fundamentals remain intact. Industrial demand and structural supply constraints could support higher prices over time. Nasdaq key levels to watch. Short-term support, $70 to $75 per ounce. Bullish breakout area, above $80 to $85 per ounce. Long-term structural support, driven by industrial demand growth. If you're trading silver or considering investing, keep a close eye on U.S. dollar index moves, U.S. interest rates and real yield changes, industrial demand indicators, geopolitical news. Silver's price story is far from over, and its relationship with the U.S. dollar is one of the most important dynamics driving volatility and opportunity in this market.